Right, hello, everyone. Thank you. Our next presentation will be from John Belizaire, the Chief Executive Officer of Soluna Holdings, which trades on the NASDAQ under the symbol SLNH. Welcome, John.
Thank you. Thanks for having me, Graham, and thanks OTC for hosting this event. Before we get started, I am going to walk you through the usual disclaimers. Since I don't have my glasses, I can't read them from here, but you should assume that they're saying that we're going to include some forward-looking statements here, and we'd like you to treat them appropriately. There are some things we are focused on doing that are in our plan, and the full sort of legal disclaimer comes next. So before I start my full presentation, I want to touch on something that Charlie Munger has said, or known to have said when he was alive. And that is, if you want to be successful, you have to take a simple idea and take it seriously. And that's exactly what we're doing at Soluna. We are taking essentially a simple idea, and that is that renewable energy should be the primary source of energy used around the globe. And making renewable energy a superpower, there are many ways to do it, and we think computing is the perfect catalyst for making that happen. And we work essentially maniacally about combining those two things to make that true. So let's go through what we do as a company. Our simple idea, our simple business is we take wasted renewable energy and we convert it into low-cost, scalable compute resources, primarily focused on high-density compute, high batchable compute operations that need lots of computing power and lots of high-density power and energy. And the two areas that we focus on as a company, one is Bitcoin mining, which is a perfect computing application for rural areas that have renewable energy, and in the future, high-performance computing. And we'll talk a bit about that going forward. Why are we focusing on this, though? Why are we going after wasted energy, and how big is that problem? Well, renewable energy is on the rise. Wind, solar, hydro, anywhere you think about it or look into it, you're going to see increasing investment on a global basis. In 2022 alone, you saw a rise from the hundreds of billions of dollars being invested in renewable energy infrastructure to reaching the trillions of dollars of levels of infrastructure. But there's a little known secret in the green infrastructure or renewable energy space, and that is that 30 to 40%, I repeat for the folks online, 30 to 40% of the energy that is produced by these power plants never actually makes it to the grid. The reason for that is because the grid was designed to be a synchronous system that synchronizes demand for power and the supply and production of that energy. And over time, as you replace these synchronized power plants, primarily coal, gas, things that can be fired by the facility, the infrastructure companies themselves, you start to see a shift whereby the control of the production of that power is no longer in the hands of the regulators or the power infrastructure companies. And so Mother Nature decides how much power is produced. And so you'll start to have mismatches. In California, they have incredible irradiation. So you have sun shining brightly in the day. And prior to COVID, well, no one was home taking advantage of that because they were all at work. And so you don't have a lot of demand, even though you're producing a tremendous amount of energy. And it produces a problem called the duck curve. Wind is the same. Wind may be blowing really high at night in Oklahoma, and everyone might be asleep at the time. So you have these mismatches. And so power plants, which are businesses themselves, need to monetize all of their energy. They need to sell every megawatt. And so the challenge for them is what to do about this stranded power, also known as curtailed energy. We estimate that somewhere around $7 billion a year of lost revenue happens in the industry because of this problem. And if you were to solve this problem, essentially you would increase the investment of renewable energy over time because they have this issue resolved. And by the way, $7 billion a year is just the revenue they make from selling the power, not from all the other tax credits and bonuses that they get from building out the infrastructure. So how do we solve this problem? We go to a power plant. I like to say sometimes I drive my little truck with the Soluna logo on it to a big power plant company and say, hey, those wind farms up there or those wind turbines don't seem to be spinning. You must have curtailment. We can solve that for you. And they're expecting me to do something about increasing the power line capacity or building a battery. And I say, no, actually, what I'm going to do is I'm going to build a data center over here that's going to consume all of the wasted energy when it's available. And so every time we add more of that load, more of that power consumption or unused power is being produced. So in this example here, I'm showing if you have a 150 megawatt wind farm, for example, that has went live in 2016. And as you can see from the far left there, over time, the amount of energy that doesn't make it to the grid, the red bars, increases up to 40%. And it's still increasing actually in that particular location. What we do is we bring a 50 megawatt data center that will consume a good portion of that. You can see we've dropped it down by 50%. We doubled the size of the data center. You start to see that drop, and we virtually eliminate it over time. There are, optimizations around the size of the facility that we make, and that's part of the technology and process that we perform. Once we do that, we have now monetized that energy, and we have also unlocked the production tax credits and all the other goodies that they get by building out this infrastructure. Because we are putting this facility right next to the wind farm or the solar plant, we now have access to an abundant series of sources of energy from three key places. One is the curtailed energy, the energy that we're buying that would otherwise not have generated revenue. We buy that at a fixed cost. The second source is what we call subtractive energy. Because we're there, the power that would have gone to the grid, we consume it. We essentially pay the power plant the same costs that they or revenue that they would make at that location. So they're indifferent. And then the third source is grid energy. So when the wind farm is blowing, but it's smaller than us as a data center, we would need more energy to hit our uptime requirements. And so we source the extra energy from the grid. But because the power plant is located in these remote areas, most of our power will be green. In fact, we design our facilities such that over 70 to 80% of our power is coming from the power plant, and more than that is green in terms of its mixture for us. So our data centers are essentially a super productive battery. We've designed them to efficiently convert the electrons that come from the power plant into high performance computing and powerful space. And we've designed advanced cooling such that we can put more of the energy into computing versus cooling the facility. So we have a proprietary design there. And then the other thing we do is, in the picture I'm showing you, that's one building, but most of our farms, that one building is approximately 1.2 megawatts, give or take. So in a 50 megawatt facility, you'll see 40 of those buildings combined into a unique design, helix design, that essentially allows us to build a large facility that is highly flexible. So if I go back to that power example, we optimize the source of our energy from all of those three places to bring our weighted average cost of power to $30 per megawatt or less. That raw input cost, if you will, becomes the driver for the computing business that we have in those buildings. To make all of that happen, we have a proprietary set of software we call Maestro OS. It's a suite of software technologies that allows us to manage the buildings and operate them, read the power prices, price of Bitcoin in the case when we're doing Bitcoin mining, and essentially optimize the size of the site, its computing capacity at any given time in 5-minute intervals. So we can scale and shrink the site very quickly to optimize its capability. And we've been able to prove this out in a number of our projects, and it works really, really well. Now, how do we turn this into cash? How do we make money as a company? And why is it interesting as an investor to look at this company? What we're essentially doing, as a reminder, is we're efficiently converting wasted energy and green electrons into revenue, into profits. And we do that in 3 ways. The first is through joint ventures. We will build facilities, and inside those facilities, we'll buy computing equipment that mines Bitcoin. The nice thing about a Bitcoin mining facility is it the production of revenue and returns is very formulaic. You don't have to build a sales force to go sell services and so forth to companies to do this. You can monetize that very quickly, and allows us to build out these facilities that can monetize the investment in 2 years or less. The same is true for hosting folks who do Bitcoin mining. So we build out the infrastructure, the power, and Bitcoin miners can come in and basically plug in their machines, and we charge them on a volumetric basis to do that. And that allows us to diversify Bitcoin across those two elements. Now, remember earlier I talked about the fact that our data centers can shrink, get bigger or smaller depending on how much power is available. That flexibility that we perform is actually a very useful behavior for the grid. When the grid needs more power, we can scale down our facility to only use power from the power plant, such that power on the grid can go back to the needs that the grid has. Well, the grid is actually open to paying for that because it becomes an asset or a resource for the grid to help it do the things that it needs to do as more of these intermittent resources come online. That's known as ancillary services. We get paid to do that as well by registering our facility as a resource for the grid. And in fact, we can earn upwards of $10 per megawatt hour. So I talked about our price earlier. We structure everything to get $30 per megawatt hour or less. So if we earn another $10 for our behavior, suddenly our price drops down to $20 or less, making us one of the lowest price providers, if you will, of Bitcoin and Bitcoin mining infrastructure. And that means for the behavioral aspects of Bitcoin, when it's volatile and so forth, our facility will be the best home for a Bitcoin miner or JV Bitcoin operation, because the lowest cost power and the most powerful compute is the name of the game for success there. Now, the fourth area where we make money is something that we're going to be doing in the future. What I've done is I've converted a wasted asset into a productive computing resource. Well, computing is not limited to just Bitcoin. I can do other types of things as long as that computing is what we call batchable, something that you can put to sleep, right? So if there's no power or portions of the building has to go dark, you can do that. And so there are sectors within high performance computing that are becoming more and more tuned to the concept of computing like this. So I've talked about the fact that there's a problem in the renewable energy space. Now, let's talk about data centers and computing. Over the next several years, we are going to see the largest increase in computing infrastructure in a long time. Probably in the last few decades, we've seen a massive growth of the internet and its use for social media and all sorts of applications. And in the last year, thanks to a little company called OpenAI that has had some interesting drama lately, everyone is excited about AI. And the reason is, I'll tell you a little story. When I started my career as a computer scientist, I was at Cornell. I was in a computing lab with all my other geek friends, and we were fascinated by this new technology that was on one of the servers there. It was a web browser called Mosaic that essentially its purpose was to help you to navigate this interesting thing called the internet that's been around for a while. And it could be a place for you to put information so people can find your information. Mosaic wasn't clear what it was good for, but it certainly sparked an incredible imagination for just about every person that was in the technology space. And for the next 2 decades, that imagination had turned into trillions of dollars of growth, trillions of dollars of losses, and hundreds of billions of dollars of growth beyond that. And if you look at that growth, that momentum, it was driven by the fact that you had the internet, which was relegated to universities and the military, converted to something that became basically ubiquitous. Anybody can get involved in that. Well, ChatGPT is essentially the same thing. When I logged into that system, I had the same experience as I did before 25 years ago, that this could unleash an incredible growth in the amount of computing that will take place. The question we have to ask is, because we are now going to be doing computing at a level that we've never seen before, it can have negative consequences on the sustainability and power and so forth. And I'm going to talk a little bit more about that. But the opportunity is, if you combine these two problems, where computing is growing at a high rate and it needs sustainable power. What can you do to benefit from that? And it just so happens that the Soluna business model is a perfect sweet spot for integrating those two things. So if computing is generative AI, scientific computing, natural language processing, those things, and we're going to prove, can be done in these remote areas integrated with renewables. Now, why is AI growing so much? It's the story I just told. ChatGPT went to 5 million users, the fastest growing growth in that in 5 days. Within a few months, it was already 100 million users on the platform and is growing exponentially. The compute is growing exponentially. The applications are growing exponentially. The models are growing exponentially. There's a company called Hugging Face that essentially is a marketplace for models that you can use to train on your environment to solve problems for your business. It went from having tens of models to last I went on the system, it has nearly 400,000 models of all different types. If you want to take the legal contracts in your business and try to fine tune to figure out how should I consolidate those so my contracts are a little simpler, where you can give it to these large language model platforms, they can learn on your contracts and propose a system to do that. To do that, you need computing, and everyone is going to want to do that. And that's why the growth potential for the market is huge. It will be all the big numbers that you can imagine in the next 10 years. I actually think it will be bigger than that, and I think it will grow faster than the internet has grown in the past. Now, here's the interesting thing. I said you need computing to do that. Well, the traditional data centers were designed for applications that are very real time and tuned. They're tuned for gaming, for social media. The way the design of the facility is for those types of applications. And so as a result, you have all the data centers built near large metro areas where there's power available and internet access available for those applications. But when you start to look at scientific applications and AI specific applications, the needs are very different. They actually need to be very close together, these chips. They need to be internetworked so every single chip can talk to the other. ChatGPT was trained approximately on 10,000 GPUs. GPT-4 is being trained on 20,000 chips. So imagine a huge building with all these chips in it and so forth and being integrated. The other interesting thing is you don't have to keep those chips modeling the entire time. You can pause them if suddenly there's a change, there's a loss in internet. It can actually put the modeling process to sleep, and then you can wake it up again. The other interesting thing is that you don't need all of the redundancy and cooling infrastructure for these types of applications that typical data centers have. So most of the big data center companies are finding themselves in a weird state right now where the requirements for the new compute that are coming in don't match the buildings that they currently own. And that's where the interesting opportunity is. The power density is different. A typical rack in a data center is 12 kilowatts. You know what AI is? 50 to 100 kilowatts. So the power density is really high. If you look at the water usage, there's a massive amount of water usage to cool computing in these facilities. So that water usage will increase significantly. The third is most of that power density, because it's so high and the space required to contain the computing is so high in that power density, they have to build entire new buildings. So you're seeing hyperscale data centers actually build containers on the roof of the buildings, and they're begging the power companies to give them more power. And that's opened up the opportunity for specialized data centers specifically designed for AI compute and integrated into large, abundant, sustainable power. And that's the opportunity that we have. Everything I've just described about the behavior and nature of that compute, we're already doing on the crypto side. Cryptocurrency mining, for example, is high density. You have thousands of chips being integrated in one location, and they use lots of power, and they need lots of advanced cooling. What we're going to do as a company is take our existing facilities, which are already pre-envisioned to support this capability, and enhance it with the requirements that are ideal for the AI revolution, if you will. So direct liquid cooling, the concept is you have a plate that sits on the chips themselves, and a special liquid flows through it that cools the chips down. So you don't need to use water from the local area. And look, where these locations are, this facility that you're seeing right now is in the desert. There's no water there. So you need air cooling, you need specialized liquid to cool the plates down. We're going to be using green power to do that. And our facilities will be plug and play, so you can integrate them very easily. And it's going to be scalable. And our positioning will be that we will build these sites for the most advanced AI training facilities. This new design is what we're calling Helix. We announced that earlier this year. And this site here, just past those buildings, is where we'll be building the second phase of our Dorothy project. And in there, we'll include this new Helix design. Now, when I say we're going to combine this with power, we're going to combine our software, this new data center design, and the large pipeline of power projects that we had. Yesterday, I sat with probably one of the largest infrastructure players in the country. They have $17 billion of assets under management. They had us walk through the production and returns and the power use that we have been providing and incremental revenues on the Dorothy site. And it was clear to them that they should open up their portfolio across all their assets to us to determine which projects we want to do to add to that pipeline. So this 2 gigawatts is an example of what's been happening with our brand. We have become synonymous with curtailment mitigation or curtailment solutions, if you will. People understand our project structure, and they understand how it can benefit the project. And it doesn't constrain these power plant projects at all. It actually preserves their optionality and allows them to continue to grow, and it recoups a lot of money for them. So how does this translate into the financials of the business, and what has the company been doing in the past year? So I ascended to the CEO role, sat at the helm in May of this year. And I came on when the company was just coming through the crypto winter, if you will. Just about every company was going through some tumultuous process. And I've been essentially having to focus my team on working our way through that winter, if you will, and coming out of it. And we are essentially turning the corner. So we are taking our business from approximately 75 megawatts under management. So we have 50 megawatts in Texas, 25 in Kentucky, and we have over 290 megawatts already planned that we can see in our pipeline of mature projects to build out. We have consumed over 11,000 megawatt hours of wind power from the power plant that I showed you, and we run the most efficient machine. So if you're familiar with the Bitcoin environment, you need efficient machines, low-cost power, scale to be successful, and that's our goal. See that 1.01 number there? That's a measure of how efficient our data centers are. So if you put 1 joule of energy into the building, we use almost all of it, 90% of it, if you will. So that 0.01 is what we're using for cooling the facility. And if you look at our projects, we have the second phase of Dorothy that we're building out, as I've alluded to before. And we have another 166 megawatts in a project called Katy that we're going to be building out. And then we have more than 2 gigawatts from there that we can draw from and mature. As we mature projects, that draws in capital. That allows us to build out these facilities. These facilities return capital every 2 years. The returns and excess returns flow up to the parent. Think of the Soluna company as the GP, if you will. And that continues to scale over time as we add more assets. So we've been focusing on energizing Dorothy, building our cash flow and managing our costs, expanding our flagship Dorothy 2, and then growing the pipeline over the last few months. And if you look at our quarterly financials over the last several quarters, you basically start to see a measured improvement as we shift the business from primarily doing proprietary crypto mining to becoming more of an infrastructure company where we offer a space to do that, or we move into some of these other sectors. You start to see growth over time. And so year to date, we have generated over $10 million in revenue. We'll continue to grow that over the next few quarters. If you look at the mixture between the different revenues, so I showed you those 3 ways we make money. Most of this year was in the 2 of the ways, Bitcoin mining and Bitcoin hosting. And later this year and into next year, you'll start to see revenues from the 3rd way, that ancillary services piece, which will begin to add to our growth. Now, 2024, as I've been alluding to, is really a focus for us for growth, expanding our facility on the AI piece. This is a quick layout of where our new AI data center will be in Dorothy. And as we begin to crystallize all of the details and projections, we'll start to put that out to our shareholders so they understand what this could do for the company going forward. With that, love to take some questions. Look, I still had 15 seconds. Not bad.
Thanks, Sean. Wanted to focus on, obviously you're moving to a different kind of compute, from full 5.9 uptime to batchable. How are you pitching that savings for companies, and why aren't they seeing that immediate cost savings for different types of compute that you can offer?
So to play it back for the folks on the, are they hearing what his questions, or do I need to repeat it? Oh, they are. Okay, great. Okay, so cool. The biggest thing about innovation is education. So most people believe for any kind of application that they're doing in a hyperscale data center, they need 5 nines, 5 nines plus 1 uptime. And that's because of the types of real-time applications that they're doing. The reality of it is that the more batchable training portions, we're not talking about inference when you type into ChatGPT and say, write me a song. That's inference, where it's using the model to answer your questions. Training is a batch process. I can train for 3 months, see the results, test it, train for another 3 months. So it's a very batch-oriented process. And so most of the sense is that people need to have super redundant facilities to do that. And what we're doing is we're beginning to position that that's not true. Our strategy to do that is not to build a building and say, hey, look, come use this building. It doesn't have all the things you expect it to have, and it's going to be fine. The better approach is to build a building, put the computing in there, and say, use the computing for your training. When they see that they can train and have no measurable difference in terms of their experience for that training in those facilities, then they will start to unlock or remove the constraints of the training or education that they need, that 5 nines expertise. So our job as a innovator will be to begin to educate the space, and to do that we have to prove it ourselves, and that has worked really well for us. We said Bitcoin mining can be something that drives renewables, and they says prove it. And so we built a facility, now we're proving it, and now we're just going to replicate that. So we would do the same thing there. That's why we're putting the Helix solution at Dorothy, so that we can prove that example. More questions?
John, it's been an impressive turnaround coming out of what was a very cold winter for you guys. What should
Hold out there again.
But you guys are in a much better place than you were 12 months ago. What should investors be looking for as we move into 2024?
They should be looking for us to continue to grow the footprint of our assets. Our flywheel works like this. We source the green energy from the power plants, and you now know how we do that. We spent a lot of time marketing. Actually, now people just call us, so we get access to this huge pipeline. We build these facilities, and the way we build these facilities is we finance the projects at the project level primarily. As capital markets open, we'll be able to also use the equity markets to do financing and build that out. So you want to look for new investment partnerships and project partnerships that allow us to build out these facilities. 2, you should start to see more scale in terms of profit being generated, because as we add more facilities over a fixed cost basis, we're able to generate more EBITDA, or profits, if you will, because it doesn't cost us that much more on a fixed cost basis to add more facilities. Each facility is self-contained in terms of P&L, and so the excess money that flows up supports a bigger and bigger footprint. Okay, so scale is really important for us. So you're going to see us focus on scale, and then the last thing is diversification. So we're going from primarily Bitcoin mining, we're expanding into ancillary services, and you'll start to see the effects of that ancillary services not only on revenue or indirectly on power cost, but you also start to see us diversify beyond the Bitcoin space, and that's going to be a big focus for us in 24.
John, we have a question from the online audience. I think kind of dovetails with your last answer.
Okay.
They're asking, how are you going to scale your business, and how are you going to compete with the data center behemoths,
Right.
like AWS?
Yeah, exactly. That's my favorite question. So the first part of the question I think I answered, which is, we'll have partnerships with financiers at the project level. Our projects are very profitable. If you have $30 per megawatt energy input cost, you can do a lot of things and make a lot of money. There's a lot of margin. So that draws in capital as long as the project is ready to build. So green projects draw capital. The second question is really my favorite question. So how does the little guy beat Goliath? Like, how are you going to compete with those big, huge guys? And the answer is twofold. Number one, we don't do what they do. That's the first thing. You are going to, yes, we're going after AI training, but we are going to go after AI training in a very specific niche. So we won't do very large, what's called foundation model training. And there's a lot of hype around AI, but I'm going to tell you all the truth. There's a 20,000 GPU installation. There are only 3 companies in the world that can do an installation that big. One of them is the government. So we're going to be focusing on the 500 GPU installations, 128 GPU installations, because most of the market, the big part of the market, is focusing on what is known as tuning. So they take a model that has already been trained, they give it a new data corpus that is typically proprietary data. So a great example is I have a data set that is about molecules. I have a model that helps me to find molecules that don't hurt humans when they're ingested. So I use that and train it on this data so it can find the molecules in my data set and my molecule library that will not be harmful for humans. And then I can focus all of my R&D on that drug discovery pathway. That is not a 20,000 GPU installation. It's a smaller GPU installation. And then the second thing that people are doing is they're taking small models. So they're training a new model that's smaller, that has less variables. And so the computing capacity that it needs is not very big. The benefit of that approach is that we can go place those types of compute in our environment. We'll be able to deliver it at a lower cost because all the bells and whistles that you would expect are different. And it'll be highly scalable. So most people start out with just doing some testing on modeling on their data, and then they figure out this is working really well, and then they want to feed it lots and lots and lots more data, and you can scale in our facility that way. The reason that works is because that is completely the opposite of the Amazon model. The Amazon model is to do big installations, lock companies into large committed installations. Even if you see the on-demand piece, fundamentally, they're going to ask you to do long periods. So our model breaks their model. And the way innovation works is you do something where the big guy has to kill his or her own business in order to come after you. And that's the trick.
John, thank you very much. We went over, so if we tired you out, we're actually taking about a 10-minute break right now.
All right.
If anyone has any other questions, feel free to approach him. Otherwise, thank you very much, John.
Thanks, everybody. Appreciate it.